Good morning. I am Anuj Singhal, and this is your pre-market setup. Well, the global setup continues to look like some volatility is back. Even yesterday, CBOE VIX surged about 15%. So in 3 days, it's rallied 50%. And in India also, we saw 15% surge in the VIX on Monday. Essentially, that's the taking out of the greed factor. That's the market's classical way of punishing the weak hands. What are weak hands? Those who chase the rallies and end at the fag end of the rally. And they are punished. The market is cleaned of those positions, and the markets move on again. Of course, this time the trigger is the fear of Fed rate hike. But I tell you something, this phase now is going to give you the best buying opportunity, regardless of whether Fed rate hike happens in September or does not happen in September. If it happens in September, maybe the market falls a bit more on that day and then moves on. If it does not happen, then the market moves on regardless. So the call here is very simple. The Nifty is now headed towards 50-day moving average of 8600. Maybe you buy a bit here and then see if it goes back to that huge support zone of 8300 to 8350, which is the last low and the 100-day moving average. And in that zone you accumulate. My sense is that the market will not break that level because we are in a bull market, and that too a roaring bull market. And that may well coincide with the Fed rate decision on 21st. The market will throw some more tantrums at the Fed and see if the Fed wants to call the market's bluff or not. Essentially, the run-up to the Fed, the weakness in that is always a great buying opportunity. And my sense is this time it won't be different. The market will punish weak hands, take them out. That process is on. That process may continue up until, say, Friday. And after that, the market may well become again into a buy zone. So for today, maybe you start accumulating quality stocks. The word is quality stocks. If they decline further, some of the stocks have corrected 3 to 5%. For example, Maruti. I'm not saying that you go out and buy Maruti, but what I'm saying, I'm just giving you an example. So some of these stocks, you keep on your radar, and if they give you 10% correction, you buy them. That's how money is made in stock markets.